please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. A status check on the markets, really, and of course there is nervousness ahead of the FN expiry today, and that's what is really causing a lot of weakness there. Sensex, Nifty all down 0.8% each at this point, and Nifty 50, remember, is below the 10,300 levels for the day. As far as mid-cap index is concerned, that's slightly performing better than Sensex and Nifty, but it's the Bank Nifty which is really underperforming the overall markets. Take a look at the contribution, what's really adding weight to the market and what is really is a drag. In fact, Reliance Industries is a big drag on the market. Unfortunately, what's really rising has lesser weightage on the overall index, and therefore the support has been less. So Bosch, Indiabulls Housing Finance are some of those counters which are still green in a falling market. Advanced decline still in favor of the negatives. Volume buzzers as far as mid-caps are concerned, two of them which are really revving up in an otherwise weak market is Religare as well as IL&FS Investment Managers, both of them strikingly up at this point with huge volumes in trade today. Mangalam has more stock spotting to do.
More than stocks, I'll be looking at options given the fact that it is expiry day, and remember the bears are getting aggressive by the moment as we speak. Remember earlier we saw a lot of writing in the 10,350 call. Now with the Nifty being below that 10,300 mark, the 10,300 call writers have taken all the premium of rupees 60 home, 85% lower on that strike, and now they're eyeing the 10,250 call. If the market sustains at these levels, do the bears get more aggressive and write that, because you have 35 rupees still remaining and a few hours to expiry. The bulls, they've packed their bags clearly. The 10,350 put writers, they have unwound most of their positions, taking a big of a hit, as well as the 10,300 put writers. The 10,300 put should come up for you. That one has also seen a lot of short covering and packing of the bags by the bulls. As far as the Nifty Bank is concerned, that one's down about 1%. 25,600 call is the most active out there. See, 200 rupees eaten by the bears out there. 14 lakh shares added with a premium decline of nearly 88%. So bears really on top.
Oh yes, bears in full grip of the market, but what's also going to define the market movement going forward will be the second quarter GDP print that is due later today. All eyes are on that one, and Sapna Das, my colleague, joins in with the buzz on those numbers coming in from North Block. Tell us, Sapna, what's expected?
Hi, Nisha. So this is going to be on expected lines, more or less. The fact that the Q2 numbers may formally mark the end of the declining trend in terms of the quarterly GDP estimates, the projections that keep coming out. That may be an expected line, but more or less, I suppose the government at a larger end is looking at a baseline projection of around 6% odd plus, possibly. Even then, that would mark a 0.3% rise in terms of the Q1 numbers. Most likely, Q4 FY17, the revised estimate that's around 6.1 is somewhere that, things may settle, or that's where the government may find some kind of a hope and satisfaction if that's how the numbers pan out. Not too much on the, on the higher side. That means basically beyond 6.2 may not be looking indicatively possible as of now, but this is all in the domain of the CSO. So this is what we have picked up from our conversations, with various officials informally. But yes, 6% base projection is what they are looking at as of now. And even if that comes in, anything after that, a 0.1 or a 0.2 will be a huge plus for the government, a huge amount. But 6% baseline is what they're looking at, and let's see. 5:30, how the numbers pan out.
There you said it. Let's see, 5:30, all the numbers. Thanks a lot for that, Sapna. Remember, catch all the in-depth GDP analysis at 5:30 p.m. only on CNBC TV18. And time now, let's take a quick look at the global markets. Asian markets tracked lower as the oil prices remained firm ahead of the OPEC meet. Remember, we saw sharp cuts across the broader indices. The Nikkei outperformed given the weakness that we saw in the yen. Remember, they came better than expected official manufacturing data out of China, but despite that, we saw cuts in Shanghai as well as Hang Seng. But we're getting some important flashes coming in from agencies. IFCI files insolvency case against REL Naval, which is the erstwhile REL Defense, to recover loans. We need to keep an eye out on that data point. Remember, these are news flashes that we're getting from the agencies, but right now we'll have to watch out for that. Reliance Defense at the lower point as we speak. That one is falling as we speak. These stocks have been underperforming for a while. Let's shift focus back to the global markets. As and when we get more details on this, we will keep an eye out on that. The European markets, let's keep an eye out on the European markets. The futures indicate a slightly mixed opening as far as the CAC and the DAX is concerned, very flat. The FTSE, that one will be in focus, down about 0.3% after underperforming yesterday too. That is primarily on account of the strength that we're seeing in the euro as against the dollar. But then again, we'll have to watch out for markets globally, rather locally. Reliance Naval, that one is at the low point of the day owing to the flashes that are on the screen.
Oh yes, for this week, in fact, this is the second instance on which Anil Ambani company has been under the IBC radar, and one of the lenders has really gone against the company in the NCLT. So you have to watch out for that one. Of course, the other one was Reliance Communications, where the Chinese lenders had gone ahead. But keeping it with the OPEC meet, let's also hear out what the energy and oil ministers of Nigeria, Russia and Iraq are expecting from the meet today.
Market is doing well. There's a lot of rebalancing going on. There's a lot of performance in terms of compliance. A bit more work to be done, obviously. A lot of willingness to continue on that path.
The market is not yet balanced and requires a continuation of common actions. And everyone recommended that after April 1st, the agreement may be extended.
I said we are after the stability of the oil market as well as the prices. And this should be really monitored, and watched carefully. We are happy with 60, maybe a little bit more than 60, but at the same time we have to be very careful.
All right, let's shift focus back to the Reliance Naval flashes that are coming on the screen from agencies. We're getting that IFC has filed for an insolvency case against Reliance Naval, the erstwhile Reliance Defense stock, to recover loans, and that is something that the street is not liking one bit. Despite losing 11% all through this week, the stock has extended its cuts with a cut of close to 3.5%. In fact, let's see all the other group stocks as well, if there is a rub-off effect on that. Something like a Relcom, Rel Infra, all of them are trending lower as we speak. But Reliance Naval is the one which has extended its cut with a cut of close to around 4.5% as we speak. We're trying to get more details on this front as of now. But Nisha, anything else that you're gathering?
No, so this is going to be very, very important, Mangalam, considering especially the fact that Anil Ambani-based companies and debt-laden companies have been under the radar of the investors also at this point. And IFCI going ahead is a very, very big move at this point.
I'm looking at the financials as well. The first half finance cost is at 319 crores, and this is more than the revenue that the company posted. In the first half of this fiscal, the company posted a revenue of 250 crores. The finance cost was 320 crores. The finance cost for FY17 was close to 572 crores, and that is more than their last year's revenue of around 520 crores as well. So the finance cost being higher than the operational income in the first half, and the finance cost being higher than the revenue in the last fiscal itself. So highly debt-laden company, and now rumors, or rather news coming in from
of course,
wires.
that is a very important thing, because if the lenders feel that the debt cannot be sustained and the company cannot service the debt, which is very, very evident from the numbers that you spelt out right now. Of course, the finance cost being higher than the operational income of the company is something which is very great.
Another stock which is losing from the high point of the day right now is Reliance Infra as well. That is the holding company of Reliance Naval. So that stock too has given up from the high point of the day, currently trending towards that red line. So these news lines are fairly important, though they've come from agencies. We'll keep an eye out on all the developments that take place.
And we can take a look at all the ADAG companies. In fact, Reliance Communications also has been in focus and has been trending weak after the Chinese lenders really went ahead to the NCLT. So yes, all those companies, Reliance Communications still holding on, but has lost some bit of gains in the last few minutes of trade. With that, it's a wrap on Business Lunch. But remember, Mid-Cap Radar is coming up next, and we'll take all these actions and news updates forward. Stay tuned.